Thank you, Ruben. This is Oliver Austria with this week's mortgage update. Rates on a 30-year fixed-rate home loan are at 6.25% today. Has been that low in about 4 months. So if you're looking to refinance, or if you have your eyes on a property that you've been thinking about buying, now's the time to lock in. What does one do in a depressed real estate market? Right now, a lot of people would argue that it is a depressed real estate market. It's a buyer's market. The sky is falling. You've heard it all. You watch TV, and it's all doom and gloom. But there are bright spots in this market. There are a lot of opportunities to still profit, even in a down market. It's just like the stock market. There's bears and bulls, and both parties make money, whatever the situation is. So, how do you make money in this market? Well, if you have a little bit of equity in your property, you may want to invest in some investment property. Now, there's two strategies. You buy and sell, which is the flippers model, or you buy and hold. You become a landlord. You become a property owner for an apartment building. Whatever you can do to create some passive cash flow every single month. Now, what I want to touch upon right now is real estate investing with the buy and sell strategy. Right now, there are mortgage companies you can talk to about financing property for no money down. I know you've heard it 1,000 times, but no money down is still available, especially if you have some money in your pocket, meaning money in your home equity line or savings or whatever it may be, and your credit's good. Okay, so if it's really still available for good credit quality borrowers. Now, what that means, with real estate investing is, let's just say that you see a property at auction or in foreclosure for $200,000. It's in disrepair, and with $50,000, you can bring it up to a value of about $300,000. There are still lenders out there that will give you 90% on that after repair value. So with an after repair value of $300,000, you can realistically borrow up to $270,000. Now, I know that you don't need $270,000 with the example that we just laid out, but what that means is that you really don't have to take any money out of your pocket in order to accomplish this. So you borrow the $250,000 to buy the property and to fix up the property, which is another $50,000, and that difference right there is your $50,000 profit, assuming that you can sell it right away, because then you'd have holding costs. Obviously, it's up to you whether you want to use a realtor or not, but the smart strategy is to use a realtor, a good realtor that knows the area and can effectively market your property. That's all the time I have for today's mortgage update, folks. But next time I will touch upon the buy and hold strategy, and try to provide some real tips so that you can go out there and intelligently speak to your real estate advisor or your mortgage advisor about getting in the game. So that's it. Have a good night. This is Oliver Austria for today's mortgage update.